let me open the US market. What they do with that strategy is they tell you to open your CNBC app, right? And if you see the CNBC app, right, the way the market closed in green, right? In green, which means it closed in positives. There was gaining and gaining and gaining on Friday, right, when the market closed. So what they do is, if the market opens in green, or if the market opens, let's say now it's green, and the market, let's say it opens in red. Let me show you an example of red. In the pre-market, this is how they say the market opens like this. They tell you to sell, right? If the market opens like this, they tell you must sell. Or another one is actually, they tell you to go to the, let me try and open the Nasdaq market and see if it has those companies and stuff like that, because I'm not sure if it is the companies. But anyway, they tell you to create a watch list, right? They tell you to create a watch list. When you create a watch list, they tell you to put companies like Tesla, Apple, Facebook, and all those companies. And if those companies open in red, if all those companies in the Nasdaq watch list are red, they tell you to sell, right? The reason why that thing is complete utter nonsense, right? Let me explain what they're actually teaching you, right? Can you see the market closed in green, right? The market closed in green for, let's say, the Dow Jones. The market closed in green for the Dow Jones. Let me show you what this means, right? This actually means the market closed, let's say, plus 300 points. It means the market rallied 300 points from the 11th, from the close in the 11th, right? In the 11th, where is the 11th? I'm not sure if I can find the 11th. This is the 12th. 12th of April, no. Market closed 9 April. It means that the market rallied from these lows, and it rallied all the way 300 points upwards, right? And it closed 300 points up. That's why you are gaining this. It means the market closed 300 points. It means the US30 or the Dow Jones closed 300 points up. It means Nasdaq closed plus 50 plus 70 points up. That's what these numbers mean, right? That's what these guys are teaching you, right? So if these guys are telling you that, let's say maybe the market closed like this, and then it opens, before I go to that, the green means the market closed at plus 300 points, right? What does this pre-market data tell you? This is pre-market data, because the market is opening at 9 a.m. EDT, right? Which is 3 p.m. this side. This is 3:30 p.m. this side in South Africa, right? What does this red tell you? Minus 100 points, right? This is what this thing tells you. It's a good thing I have my quarter points drawn here. Market opened up here at 33,800, right? The market has now dropped to 33,700. That's why the market closed at 33,800. Please catch this thing, guys. The market closed at 33,800. Right now, the market is just slightly below 33,700. That's why it's telling you pre-market, the market has moved minus 102 points down, right? So basically, what these guys are telling you, right? When they say, when the market opens at a green here, let's say maybe the market opens at plus 100 for US30, you must buy. What they're telling you is, they're actually telling you that if this data has increased, just buy. If this data has increased before the market open, just buy. If this data has decreased before the market open, just sell, right? What the companies in the Nasdaq, right? In the Nasdaq stock index, problem is that I don't have it should be showing them here. It's not showing the companies, but if you create the watch list, right? What the watch list tells you, instead of US30, replace this with Apple, right? Replace it with Apple. If Apple closed up and right now it's falling, it basically means that Apple will obviously be red on CNBC because Apple is dropping technically. So basically, these guys are just telling you, if the market has been increasing technically, buy. If the stock exchange market has been decreasing technically, sell. And that thing is actually too, how can I put this? It's too easy. It's too easy. The market is simple. Trading is simple, right? Trading is simple, but not easy. Trading is simple, but not easy. What do I mean by that? Trading has different moving parts, right? That you need to put together. in order for you to be highly profitable. I can guarantee you that this strategy, even if it's 50% profitable, your risk to reward ratio will be terrible, will be horrible. I don't even remember how many times I've back tested this strategy, how many times I've used it, and I've seen that this thing is very dangerous. That's why people should actually be taught that the way I use fundamentals, right? The way I use these fundamentals, there is something called morning brief, right? CNBC morning brief. There's something called this. You can see even it's in my search history. It's always there. I use this one for you guys to know that I use morning brief, right? I actually use fundamentals in my technicals, so I actually know what I'm talking about, right? I use my Wi-Fi just disconnected, but anyway, I use CNBC morning brief. What that thing actually does, right, with CNBC morning brief is that when news data comes out, right, CNBC morning brief before the market opens tells you what has been happening technically, what has been happening fundamentally in the United States that is affecting the stock exchange, right? It tells you that the Dow Jones has dropped 100 points, the Dow Jones has increased 100 points because of ABCD, right? I already know that Dow Jones has dropped because I'm watching it technically, right? I know what it's doing technically. But once I read that data, I start to know that, okay, fundamentally, this is what is happening and it's supporting my technicals, right? That's why this thing, it will not help you because just because US30 has been rising pre-market, it doesn't mean that US30 is going to continue rising as the market opens. That's not going to happen 100%, like 100% of the time. It will happen a certain percentage of the time, right? Even in December, the market was not doing all those things. It was doing none of that. It wasn't doing any of those. And that's why people should actually be careful of these mentors who teach you this Nasdaq 330 strategy or this US30 330 strategy, right? Those things can be very dangerous. They can be very, very dangerous. Get to learn technical analysis and fundamental analysis. Learn to use them together, or just learn technical analysis, right? Learn to analyze for yourself. Learn top-down analysis. Learn how to day trade. Learn how to swing trade. Let's just learn that whole 9 yards, bro. Learn that whole 9 yards. Trading becomes very simple once you have learned the information that you need to actually be profitable. Don't use those strategies. You are just gambling. You are gambling. That's why companies like FTMO don't actually do partnerships with people who trade like that. You should ask yourself why a company like FTMO, it's a very big company that actually funds someone who is skilled, someone who's consistent in their trading. Why don't they allow those things? Why do they actually lock that you can't trade during those times? Because the volatility is accelerated at that time, right? So you guys should be careful with those things. This is CNBC morning brief. This is morning brief. This is the news. This is the data that I use, right? Even on Friday, I used this data, but it was saying it's flat. But how did I enter this buy, right? Where is that? Where is this platform? How did I enter this buy when this thing was telling me that, oh, it's flat? How did I enter this buy? Because I actually knew that, no, for me, this thing must go up technically. Because I knew from the daily time frame that, no, the market still has some momentum to push upwards. And I knew from the 4-hour time frame that, oh, it just broke out from a range, right? You guys can see it properly on TradingView, but my TradingView is really acting up because of my internet. But you can see that it was ranging. It broke out and we started buying over here. We started buying and buying and buying it all the way upwards. You guys can check my previous videos and you will know that, yes, we actually sent that analysis and we were all buying that thing, right? We were all buying. So anyway, that's it for this video, guys. Just be careful with that 330 strategy. Also, it's 430 strategy, whatever it is, be careful. Learn how to analyze the markets, learn how to read those charts, learn how to understand the fundamental data, right? Learn how to use it in line with your technicals, right? So that's it for this video, guys. Thanks for watching. Don't forget to subscribe and stay tuned for more videos.